Good on, ladies and gentlemen. Sorry about that. I was trying to start it on my computer, and I was logging into Zoom. It's a PC and not on my MacBook. It wasn't working for some reason, so we're doing this on my laptop. So the dimensions might be a little different from when I was on my big screen, on my desktop. So that'll be a little different from the first workshop, but um, let's wait a couple minutes here because I know I did start it late, so there might be some people that are caught off guard by me just posting it. So let me throw it in my journal, wait 2 or 3 minutes, and then we'll get the ball rolling. Okay, ladies and gentlemen, welcome, welcome, welcome. This is part two of our Swing Like a Pro workshop. Keep in mind, I don't really like write up stuff before these workshops. It's sort of just all off the dome. So I will go on tangents occasionally, but everything I say is still intentional. And I think most of it, especially if you're new to trading, should be useful. Uh, the first part of this workshop, I believe, was about 2 hours long. I think it was like basically 2 hours long. I don't know, and something like that. So if you haven't seen that and you're watching this, or you're watching the recording of this, or you're just tuning into this live, even, I would go back and watch that, even if you do watch this part first. In the first part, what I did was basically I touched on some principles of swing trading, some rules I have, basic guiding principles of how not to get shaken out of a trade. Before I go on, actually, I want to clarify, can everybody hear me in the chat? Just throw a comment in the chat if you can hear me in the Discord chat, because I don't want to start talking and then. Okay, cool, perfect. I'm gonna sound a little different than I did on um the first workshop too, because I'm on my laptop. Like I said, I don't know what was going on with my computer, but I was on my main mic on the first workshop, so I might sound a little mufflier or whatever the terminology is there. But anyway, um, what was I saying? Yeah, so we went over some principles of swing trading, some basic things I've learned over the years of just oh my God, Seth Rogen laugh. Um, some things I've learned over the years about swing trading. You know, I've made some mistakes. I think I've done some things very well also. At the end of the day, I'm a stock picker. It's what I am. I try to pick stocks that are going to outperform the market by a wide margin. Like that's the goal. At the end of the day, after all the nuance and the detail and the charts we go through and the catalysts we talk about and the themes we talk about, the purpose of all of it, is to pick stocks that are going to super perform versus the indexes. That's the only point, right? Everyone's here to make money. And if you choose to be a stock picker, which is a hard game to play, then your goal is to pick stocks that are going to outperform, significantly outperform a similar allocation to a broad index like the S&P 500 or like the Nasdaq. That's your goal. And if you need to, I think the other day, um, sorry, Leo's like sitting right underneath me. Um, the the thing I put in my journal the other day, the sticky note I used to have in my first 5 years of trading, it's like such a simple thing, right? Like, don't chase. There's always another opportunity. Patience pays. These are like such basic things. People hear that and they're like, that's so rudimentary. Like, what does that teach me? Yet, yet, new traders violate those basic principles all the time. And that's why something as simple as like having a sticky note out reminding you of some of these things that you see every day when you're looking at your portfolio or you're right before you're about to make a new trade, like that's, I think it can be powerful. So, if you are somebody that struggles with breaking basic rules like that, I would encourage you to do that. But anyway, part one, we covered the principles of swing trading and we recapped two of the best swing trades for us for the year so far, which really aren't even swing trades. They've become core positions now, in my portfolio at least, which were Centrus Energy and Nebius Group. And we recapped them through the nuclear trade. I talked about the thematics, why I believed in the thematics. We talked a little bit about how we stayed in the trade for that long, how it was easy to stay in the trade for both of those positions. And all of those principles and lessons are important, to the concept of swing trading. So today, what we're going to do is we're going to touch on some positions that I own currently that could be setting up for some nice moves. And are they all going to work? No. Right. So, like, before we even get into this, because I think we're going to touch on 6 names today, I put these in the note yesterday. We were obviously supposed to do part two last night, but I just got back. I was going to get back from the gym too late, so I didn't want to start the workshop at like 10 p.m. But um, when we weren't going to do the note yesterday, I put out that we are going to go over the short interest basket today, Sphere, Bloom Energy, CRISPR. Then we're going to go over GSRT a little bit. I'm going to go over Warby and Genius, as well. So that's six. One, two, three, four, five, 6 stocks. We're going to go over quickly. Boom, 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 boom. I'll take questions, obviously. And again, they're not all going to work. For those that have followed my portfolio this year, we're doing pretty well, right? Like, up 85% year to date with the S&P 500, up just a couple of percent year to date. So we're doing well on this idea of super performing the market with stock picks, but not everything has worked. There have been positions that we've gotten into that we've either gotten shaken out of or I've gotten shaken out. I don't want to say we because not all of you do exactly what I do with the positions, but that I've gotten shaken out of. I mean, Galaxy is a prime example. I've gotten shaken out of that twice this year, and every time I get out of it, it rips. So there's some stocks that just, are going to evade you. And there's mistakes that I will make, like everyone else. And there's going to be stocks I miss. There's going to be stocks that rip without me. The Logical, I think, caught that crazy move today on Nectar Therapeutics, which props to him. Bravo. He's going to have his workshop right after mine here. But there are going to be stocks I miss. There's going to be stocks I nail. There's going to be stocks I nail with size. There's going to be stocks that I nail that I wish I had bigger size on. All of that is part of the game. And you just have to live with that as a trader. You can never own everything. You're never going to be in every big trade. And there's going to be trades that end up being big trades that you either get shaken out of or sell too early. Once you live with those three realities, and make swing trading mountains easier because you can just ride with the opportunities that you have conviction in. And you can say, you know what? Yeah, maybe the names that I'm in aren't ripping right now, but I'm confident in the setup still. I'm confident in the opportunities. And that's really the key to swing trading. So we're going to go over these names. We talk a little bit why, but why we got into them originally, not as much actually, really. But I'm really going to talk about what they look like now, and why I think they still look promising. But I'm not going to give really really intricate, detailed commentary on all of these. That's more going to be up to you guys to ask me what more you want to know, because I could spend 3 hours, but we're going to do this for this work. This part's going to be about an hour. The first part was 2 hours. This part's going to be about an hour, 3 hours total. But I'll answer any questions you guys have. So let's power through these, and then we'll go to questions and then just kind of improvise it from there. Um, so anyway, Sphere. We had a nice analyst report on this, with a pretty big price target that we covered in transcripts, um, yesterday. And it had a really, really nice move off the open. It was up as like high as 10%, up here in the 42s on um, that report. And it came back down with the market, yesterday, with all the volatility we had around the strikes and the ceasefire and whatnot. And the markets were up and down yesterday. So it came back down, but then had a nice ramp back into the close. Today it was sort of flat, traded down 0.12%. That's whatever. The thing with this name is, this is the setup that's worked a lot for us this year to find explosive names. This is the setup we went over on SMR. This is the setup we went over on Centrus Energy. This is the setup we went over on Nebius. Like, a lot of the names we're going to touch on today have this similar setup where they're either right underneath, pushing up into 200 moving average resistance, or they've just accomplished it recently, as in a few weeks ago or maybe a month ago, and they've been consolidating above that level since. You'll see a lot of the names we touch on today that are in that similar category, but this is obviously one of them. And when I see this sort of setup here, where price comes into the 200-day and there isn't a real effort by sellers to reject price here, right? Like, if a stock's going to make this climb, right? Come down here, attempts to bottom out here, you get about a month and a half of time where you probably don't want to own this, probably don't want to trade it, just messy action, right? That's usually how it is when a stock attempts to bottom out. It's just messy. It's price discovery. People are deciding, is this really the bottom? How much lower can it go? It's pinned below the 9 and 21 EMAs. No one really wants to be a hero down here, right? And so the the philosophy you have to have in these situations is, I want to be patient. At least that's the philosophy that I have as a swing trader, right? I'm not a knife catcher. I'm not a bottom caller. I want to see structure build before I get interested. Okay. And I've talked about this before, but there are some people out there that are value investors, bottom fishers, knife catchers, who they want a bottom ticket and say, there's crazy upside from the lows. I'm not that guy. I want to buy strength, or what I like to call near strength, which is what I would call this, which is what I would describe the action here since May 12th. But I'm fine with missing this. Okay. And to be a swing trader that can stay in the trade, one thing we talked about in part one was this idea of, like, having a cushion on your position makes trade management exponentially easier. And I don't need to tell you that. You all know that, right? Because you've all been there. When you put size into a position and you're red right away within a week, it just makes it harder to manage. Versus, you buy it and it goes up right away, you feel invincible, right? You're like, oh, okay, it could pull back 5%. I'm chilling. I'm up. I'm up. I'm up. That's a very real thing. That isn't unique to you as a person. That's just human nature. So some people say it doesn't matter. And from a mathematical standpoint, yeah, having a cushion from a mathematical probability risk reward standpoint, if you're going to be that granular about it, it doesn't matter, but it does matter to psychology. And to me, that matters a lot for position management. It's part of the reason why I was able to sit through those trades we recapped in the first part with Centrus and Nebius, because I'm willing to be more patient with positions where I have a cushion. And I think most people are. So anyway, entries matter. That's why I don't try to knife catch. I wait for structure to build. I'm fine with missing this portion of the move. There's some traders that are not fine with that. There's some traders saying, you know what, this is the opportunity here. Like this is the move you're looking for. I disagree with that. I think this is the risky move. This is the move where you're taking an extraordinary amount of risk. You're buying the stock here under the 9 and 21 EMA where it's just been rejected constantly for months. And you're just saying, I'm going to bet that this thing just has an inflection in sentiment and makes its way all the way back up to the 200 day. I mean, some people like to make that bet. This is not the bet I like to make. So anyway, price came up here, made an attempt to bottom, came up here into the 200 day, and we've spent, a month consolidating under the 200-day moving average. And in the last week or so, price pushed above here. And now we have a pretty blockbuster report out with a $75 price target, saying that this is, a stock that deserves a higher multiple and uniquely positioned from an ad revenue standpoint. And you have a stock that's 30% short, you know, that's to me is a setup that I'm willing to take the strike at. And so we took a strike at this yesterday and, today traded flat. That's fine with me. Got a nice head start yesterday. And um, it's an interesting setup, so we'll see where this goes on Sphere. But this is one name in our short interest basket. And, keep in mind, our short interest basket started with ASTS, which look what happened to that here, right? Look how long this spent sitting at the 200 day. You guys see this 200 day down here? See this? Consolidation around the 200 day, consolidation around the 200 day for what is this? The better part of a month and a half-ish, right? And what else did this stock share with what the one we just touched on? Well, it was also about 30% short and it doubled in a month. But again, this is not, I don't want to be like a infomercial guy here, but this is not like, this is not guaranteed to happen. I'm not saying that Sphere is going to double. I'm just saying that I hit these types of setups. To me, these are setups, the high probability setups. It's like, look, price wants to consolidate around the 200-day for months or weeks, and there's high short interest. It's like you play the probabilities, right? Are they all going to work? No, some are going to fail, and some are going to end up drifting back down, and then you get out. Okay, you get out for a fixed loss, right? I have a maximum point of risk, right? I'm sure you guys remember with Compass Therapeutics, we got shaken out of that one. Not shaken out. We got out of that one when it fell below the 21 EMA, and it ended up going down 30% on some bad news weeks later, right? So sometimes getting shaken out is the right thing. And it's not even getting shaken out, it's falling below your maximum point of risk. Sometimes you have tighter risk on certain positions than you do with others. But anyway, ASTS had this similar setup where it's bouncing, consolidating around 200-day, super high short interest. So you have with Sphere. So other name in our short interest basket, Bloom Energy. So it's doing a similar thing. It's obviously got a little bit more of air now from the 200-day than these other ones did, but you know, uh, it's not far away. And this thing spent a couple of months doing the same thing, bouncing around the 200-day, and now it's emerging. Price is what, 10, 15% higher from there, but nothing crazy. And it's retaken the 100-day now, which was actually overhead, which sometimes happens. It just depends on how prices acted. But this was a stock changing moment for this company, right? Back here in November 2024, we actually traded this here. This was like the craziest options play of the year for me last year. For those that were following me on Twitter back then and were in the Discord back then, it did 5,000% on the Bloom Energy options here when the stock went from $9 to $30 in like 5, 10 sessions. Like it was ridiculous. Um, so yeah, this was a crazy life-changing moment for this company, right? But what's happened since then? Stock consolidated a little bit. Market sell-off happened in April. This thing fell off a cliff. Where did it fall? Fell in and around the 200-day. Spent a couple months consolidating there. Now it's building back up, right? And it's been relatively muted volume, right? Like sleeper volume for months. But you know what happened here. This is where institutional interest probably entered the stock for the first time ever, right? You go back 2 years. I don't know how long this thing's been publicly traded. We go back 5 years, still the highest volume. You go back, okay, it hasn't even been public for 10 years, but you go back, it's the highest volume ever. So, yeah, I mean, something changed about that name. But anyway, coming back up now, and short interest is red hot on this thing again, right? And um, when we initiated this position, this was also a report. I think it was from JP Morgan. I got to go back and search my journal. Which, by the way, a lot of times you guys, some of the new members, especially if you're watching this recording, you guys ask me like, what's your cost based on a stock? When did you alert the stock? Like, all this shit. Um, you can just find it. Just search my name and say, type in from Stock Talk Weekly in the search bar, type in my journal, Stock Talk, and type in whatever you want and you'll find the post. But anyway, what was I just saying? Oh yeah, when the Bloom Energy alert went out. Uh Dang, we've been in this for a while. Oh, not even that long. June 5th. Okay, so June 5th, it went out at 2056. Okay. So stock's what, 22.95 now? So it's about 10% higher, right? But not a crazy move. But it went out at 2056, June 5th. So we got in around here. And honestly, this was a good place to get in, right? When we see, I keep saying this over and over again, but price pushing into this overhead moving average, right? This is the 100-day. In this case, it was the 200-day. And one of the stocks we recapped earlier was the 200-day. You guys get the point. It doesn't really matter. Moves over the 200-day tend to be more explosive, but anyway, I digress. This was price pushing up into the 100-day, which is why we got into this and on a highly shorted stock, and the 9 and 21 were pointing up ferociously. So this thing broke through. To be frank, it's actually a lower risk opportunity now, in my opinion, that now that it's climbed that mountain. So we're still in it. And this is also 23, 24% short. I mean, what's the probability this thing sees the 25s? I think pretty high if the market holds up. And the solar trade heated back up today, end of day, usually sometime in and around the solar trade, for those that have traded that thematic, um, you see this hydrogen name start to act well. Um, I think out of the hydrogen names, this is probably the best setup. It's the highest quality stock in the universe. The rest of them are all shitcos. So highest quality stock, highest short interest, best chart. I don't know. So this is the other name in our short interest basket, and then the last name in our short interest basket is CRISPR. I mean, at risk of being repetitive, right? Like, for those of you that are paying attention, you catch the drift, right? Like you catch the similarities between these setups. For those that are listening right now in the chat, between these charts I've gone over, are you guys seeing the similarities? Like without adding nuance to it, are you guys like seeing the type of action I'm pointing out? Like is there, like when I pull up this CRISPR right here, 3 month chart, and I pull up this Bloom Energy 3 months chart, right? And I pull up this sphere 3 month chart. Like, are you guys seeing the similarities here? Like the action isn't like the price action isn't identical, but are you guys seeing the type of structure I'm looking at? This is important. This is why I'm asking you guys. So if you're listening and you're in the chat and you're available, like are you guys recognizing the pattern, the sort of things we're looking for? Because if it's not making sense, I want to know because I want to explain it. I want to explain it in a way that makes sense to people. Okay, so we're looking at there's certain qualities we're looking for. We're looking for high volume interest. Okay? We're looking for stocks that are either about to or are newly emerging above the major resistance, right? In this case, the 200-day moving average overhead. We're looking for 9 and 21 EMAs pointing up, right? B doesn't necessarily have the volume, but B has all of those other qualities. We're looking for stacked moving averages like this. On many of these, you're also seeing either occurring golden crosses, which is about to happen here. Golden cross is a 50, 200 cross. You're either seeing those occurring or about to occur. These are just some of the qualities we're seeing, right? You're seeing, again, same thing here. Emerging above the 200-day moving average, 9 and 21 pointing up. Moving averages stacked, right? Of high volume interest or higher volume interest. Same thing you saw with ASTS. you know, coming into this move, right? Like this breakout over the 200-day. Look at the volume on this. Look at the volume on this breakout over the 200-day. Look at this candle versus all of this. Look at this candle, right? Like some people thought this was a selling opportunity. This is a buying opportunity with that high candle, right? So you're seeing the same thing on all of these, right? I mean, like we went over this in workshop in part one with SMR, right? Look here. See the volume? See this action all along the 200-day? Right here, right? See the volume here when it breaks? Big volume, right? Look at all this volume. Look at this volume here. It breaks. What happens? Stock doubles, right? L LEU, we went over this in the first workshop. What happened here? Look, action around the 200-day, consolidation around the 200-day. This green dotted line, right? Okay, what happened here? High volume, breakout. What happened? Stock doubled. Okay, I can give you, I don't know how many examples. MBIS, okay? Stock consolidated around the 200-day, 100 for, I don't know, a month here. High volume candle breaks higher. Another high volume candle here. What happens? Stock doubles. Like, I don't know. And now look at the ones that we just went over. CRISPR, what is happening? These are doing the same thing in the same area. Here's your green dotted line that on all those charts was 100% lower. They're doing the same thing on all of these. Okay, so, okay. Anyway, replay this workshop on the recording if you're not seeing what I'm seeing, because I feel like it's pretty clear. With all those like 11 examples I just gave, should be pretty clear to you guys. And you don't need to be a rocket scientist to see this type of price structure. You don't need to like watch 6 hours of YouTube videos and do the 13 hours of chart work to learn this type of price structure. This is like bozo price reading 101. Like I'm not a technical analyst. Okay, but I still know how to spot structure and strength because I've been doing this for long enough and I've seen enough of this action. That's why like I could just flip through 8 charts right there and show you the same thing happening over and over again. Because you recognize this stuff over time. Like, hey, these are explosive setups, high short interest, consolidation around the 200-day moving average, hot thematic, good catalysts on the table, high volume interest, analyst coverage. That's what makes for explosive moves. So we position ourselves in baskets of these, or I do, and you hope that out of 5, 2 double, or out of 7, 3 double. And that can make your portfolio. That can drive your gains. Like Centrus Energy and Nebius alone drove huge gains for me this year. Just 2 stocks in a portfolio that ranges from 15 to 20 stocks. 2 stocks drove performance for me for a whole month. Right? So if you don't have to be right on every one of these opportunities that you decide to take. You just have to recognize when the probabilities are high and you take the stab that way. You know, you say, look, the probability's high. If it doesn't work, it doesn't work. Okay, I draw a line in the sand. I set a maximum amount of risk that I'm comfortable with. And a lot of you ask me about position sizing, right? I've gotten this question a lot, like, oh, I don't know how to appropriately size my positions. Let me give you the simplest lesson on position sizing you'll ever get and the best lesson. You size your positions so that the dollar amount that you will lose at your point of maximum risk is palatable. That's it. In other words, and I don't want to say that's it because the other element of that is conviction. Obviously, if you're highly convicted, you size bigger. If you are less convicted, you have less points of consensus or confluence in your opinion, you size smaller. That's obvious. But outside of that obvious element of conviction, that is all position sizing is about. Is your absolute dollar risk at your maximum point of risk, whatever that is, whether it's the 200-day, right? Like for me, my maximum point of risk on Sphere is a daily close below the 200-day. That could happen tomorrow. Okay. And if it does, okay, maybe I get shaken out. Maybe I don't. Maybe it goes lower. Who knows? But I'm in it for the momentum and in it for the opportunity that it makes a parabolic move. And sometimes you're going to be right. Sometimes you're going to be wrong. On SMR and LEU and Nebius, I was right. There were many others that I sold too early that ended up doubling. I can live with that. I don't need every stock in my portfolio to double. I also don't need to be in every stock that doubles. I mentioned this at the start of the workshop. I'm totally content with that. So live with that reality, take the stabs where they're appropriate. But anyways, that's the short interest basket currently. Like I said, I exercise those ASTS calls, so I'm technically still in that one. That I guess counts as part of the short interest basket. But in terms of the ones we've gotten into recently, it's Sphere, it's Bloom Energy, and it's CRISPR. Are they all going to work? Probably not. Might one or two or maybe all of them work? Yeah. So until they break down, until the structure breaks down, then I'm going to stay in them. And I guess you can add ASTS to that, even though I'm not in options or anything on that anymore. I just exercise the calls. So, um, yeah, those are the setups I'm talking about. So Sphere, and this is CRISPR, and you can kind of see the similarities as I'm pulling these up. You can see the big volume here. And this is Bloom Energy. And like I said, the only thing the Bloom Energy setup is lacking for me is volume, but I do think the other parts of the story are promising. So that's why I'm still along that one. Um, okay, GSRT. It's back. Okay, so I don't even know why I have the chart pulled up on this, to be honest. If I'm going to be really honest with you, as somebody that's traded SPACs for many years and understands them well, you don't really want to chart SPACs because there is a fixed price floor, and that doesn't exist with any other stocks or any other assets that you would chart, really. Like there's no such thing as a price floor on a market asset, but there is with SPACs. So I do think that makes charting pre-merger SPACs more complicated. So I don't recommend charting them, but I just have it up for reference while I talk about it. So just wanted to say that before I get into it. But if you were going to chart it, I mean, the volume is just like, the volume is like insanely bullish, obviously, because it's just nothing but accumulation. It's just these huge volume bars on the green days, and there's absolutely no sellers. So if you do want to look at anything, you'd look at the volume on something like this, and you would see that literally it's just all accumulation. But anyway, I continue to believe this is the lowest risks nuclear play on the market to be pretty straightforward, and that's why I continue to hold it in full size, and I haven't sold anything. We were buying here. This is where I was alerting it when it was consolidating down here. You basically had no risk here, less than 4% risk. For those that are still holding with me, the risk has gone up a little bit, obviously. Now it's up at 1130, so the risk is, closer to 10% now. But I'm still holding in full size because I think it's mispriced. You look at the rest of the comps, SMR, Oklo, NNE, the stocks aren't going down. They're just going up more. In fact, SMR went up another 16% today. So that to me tells you where the enthusiasm is for small modular reactor plays. And I mean, it's just mispriced if that's the case. Like I said this on Spaces today, but either SMR has to crash or this has to like triple. So I don't know. One of the two things has to happen in my eyes for peer valuations to make sense. So um, yeah, pretty simple, pretty straightforward. We had an amazing opportunity here to accumulate it. I literally posted that I was buying it, I don't know, every week. If you search GSRT in my tag, I think you'll find maybe like 50 posts, but yeah, we accumulated it at near zero risk. The risk is a little higher now, but I'm not selling any. So that's the story there. They have an investor presentation tomorrow morning. I believe it's at 9 a.m. EST. I could be wrong. Um, but anyway, yeah, maybe that increases interest in the stock. I know a bunch of people on Twitter who are like on this stock now are like, yeah, it's gonna go up 50%. I have to like, I don't know, dude. I just think the risk reward is good. I'm not expecting it to make a crazy move on the investor presentation or anything. Um, but I do think the stock the target is mispriced. That's pretty simply it. The target of the SPAC is mispriced. Um, so yeah. And there's basically no risk on the trade for me. So um what else were we going to touch on? Yeah, Genius. So I don't know if somebody saw it in the chat, but today I put in the chat, I was like, we want to close above 1007 on Genius, and we closed at 1008. For all you astrology people. Oh, great thing. Before we get into Genius, I will explain that. Thank you, because I got a bunch of questions on this, and I said I was going to explain it on the workshop. So please bear with me for those that already know this. But uh, yeah, I can briefly explain how SPACs work. So SPACs are special purpose acquisition companies. They are essentially a trust full of money. The goal of that trust is by the deadline the NASDAQ gives them, so they're publicly traded trust. By the deadline the NASDAQ gives them, they have to find a merger target. Okay. And the merger target they have to find is a company that they think is interesting, right? And in the SPAC era, there were a bunch of speculative companies and a bunch of garbage and a bunch of EV companies and a bunch of bullshit that went public. And there was a bit of a too much of a SPAC craze in 2020 and 2021. We traded it. It was a hell of an opportunity to trade, but it was a bit too crazy and a bit too crowded and diluted. But anyway, SPAC funds a target. They propose a merger date. They enter a definitive agreement. Then there's a schedule set up for the actual merger. It's generally months long. For GSRT, it'll be sometime in Q3 or Q4. But prior to that merger, the SPAC trades as the trust with an agreement with the company to merge. And so many of the SPACs move well in advance of their mergers. For example, one of the big SPACs that we traded back in the day was Lucid when it was a SPAC, and it went from 10 to 60 a share. Okay, it's 6x before the merger with Lucid. And after that, it crashed, like many SPACs do. After the merger, many SPACs crash. And that's important to keep in mind. But before the merger, you have a floor of risk. Okay. And what I mean by a floor of risk is prior to the merger, there's something called a redemption deadline. Okay. And at that redemption deadline, you can redeem your shares in the trust, okay, for something called net asset value, NAV. That generally ranges anywhere, depending on the SPAC, from 10.15 all the way up to 10.60, 10.70 sometimes. In the case of GSRT, when we bought it, it was sitting around 10.27, I believe. And we bought it in the 10.50s. That means your total risk, your maximum risk in that case when we were buying it was 4%. Now that it's 11.30, your risk is higher than that. It's about 10%. But that's what a SPAC is. And after merger, there's no more price floor. There's no more guarantees after merger. Then it's just like any publicly traded company, it can go to zero. So you have to always keep that in mind, you know? But yeah, pre-merger, it is different because pre-merger, there is a risk floor, and that is around 1030-ish, a little bit under 1030 for GSRT now. So yes, you can find it on SPACtrack's website. I think it's called listingtrack.net or .io. I hate that I'm butchering the URL, but I'll post it for you guys later in the journal. Remind me. I'll post a link for you. But yeah, you can track it. You can also track it by their filings. It's very straightforward. And then there's a guy, Julian Camacho, on Twitter that posts the updated NAVs because they get slightly updated by a few cents every month, by like 4 or 5 cents. So those aren't in the filings live. The quarterly filings only show you the last trust value. So you have to if you want to know the exact NAV to the penny, you have to kind of know how it's going to inflate by month by month. The adjustment, yeah, the adjustment does mean something because if it goes up by 5 cents, then your risk is a little bit lower, right? So yeah, it does. But you won't be it's not in the filings because the filings, it happens semi-regularly and the NAV can update in between filings. So if you want to know the exact NAV, follow somebody like Julian and he posts stuff like that um on Twitter. Um Yeah, it will automatically convert to the ticker. Okay, the ticker is going to be NKLR. It will automatically convert to the ticker. But keep in mind, a lot of SPACs tank after they merge. Okay, ASTS was a SPAC. Okay, see back here? I don't know if everybody's looking at this. A lot of people don't know this. ACS was a SPAC. Back here is a SPAC. They went crazy and they dumped to the fucking death. And so many other Stocks for SPACs. Genius, which we're going to talk about next, was a SPAC. Went up to the moon and dumped after merger. Let's climb back out, right? Like a lot of these were SPACs. So DraftKings was SPAC, but this one didn't do that. This is one of the few exceptions that did not. Um, just went up super fucking high. Well, I mean, it did come back down here after, but right after merger, it went crazy. So yeah, anyway, there have been a lot of examples. Some have gone up, some have tanked, some have skyrocketed first, then tanked, some have never tanked. I mean, those are rare, but after merger, all bets are off in terms of your risk floor. So some people are going to want to hold this after merger. I'll probably hold a little bit. I hope they introduce options so I can get some options and hold that so I can have lower dollar risk. But yeah, I'm expecting it to be repriced. I mean, it's just the other SMR plays are worth billions and billions and billions of market cap, so it doesn't make any sense. So anyway, that's it on GSRT. Let's get into Genius. Okay, so yeah, I mentioned in the chat today, wanted to see it close over 1007 and we got 1008 close. That was just funny and coincidental. But there are also some weird after hours fills on this thing today for like there was like two fills for like 120,000 shares after hours. I don't know what that was, but Benchmark reiterated their $12 price target this morning on this thing too. Um, I really like the chart on this. Like, I think the weekly is just like crazy. Like, look at all this volume over here on this side. It's been like, I don't know. This thing is just really beautiful in my opinion. You look at this. So this is when the 200 week moving average emerged right here, right? And for people that don't understand that, like moving averages just track price. So like if the stock hasn't been public for 200 weeks, it's not going to have a 200 week moving average, right? So this is when 200 weeks showed up, right? And this is 200 week moving average emerging. And what you see here, I don't even know what to call this, but this setup should have a name. Like this moving average cross should have a name. I mean, obviously you have a golden cross technically here where 50 is crossing the 200. That is a name, but every moving average is crossing the like is simultaneously ripping through the 200 here. Like that looks like something out of a textbook. Like it looks like a rainbow. It just looks beautiful. Um, so yeah, I just think that's gorgeous. And I also think the story is great here still, I know people got annoyed with this because um it like chopped around for a few days, like went up and down 2 or 3%. People are super fucking impatient, but um I still really like the setup. And I think the story is just great. I mean, you look at Sport Radar, stock's up like 53% year to date. Genius up like 15% year to date. It's just been consolidating beautifully here and has tons of range. Like, and I don't know. I think odds are this thing probably sees 13s, 14s. Yeah, I have a tweet on it. You should go look at the tweet. Here, let me pin it. Let me just put it on uh I'll put it in the chat after this workshop. But if you just type in from Stock Talk Weekly on Twitter and type in NFL, you'll see it. But yeah, the NFL is the number one shareholder. They have 9% of the company. They're the largest shareholder of the company. I just think that's incredibly bullish. And also, I just think there's a little bit of a valuation gap to be closed with Sport Radar, especially because of like all of the optionality that Genius has in their data rights and the advertising optionality that they have too. So anyway, I just think the daily and monthly charts are really gorgeous on this. And if you haven't seen the thesis, like I said, I'll put that tweet in the chat, but most of you should have seen it on my Twitter, I imagine. If not, just search from Stock Talk Weekly on Twitter and um you could either you just search the ticker Jenny and it'll come up. Um but yeah, NFL majority owner and they got their contract with the NFL extended to 2029, so they'll be the exclusive data provider for the NFL through the 2030 Super Bowl. And they also have rights to the Premier League, exclusive rights to the Premier League through 2032. They have exclusive rights to the PGA Tour. They have exclusive rights to NASCAR. They have exclusive rights to March Madness, and it's a $2.5 billion company. So, yeah, I just think the stock should be repriced a little bit. I think minimum should be trading at 13 to 14, in my opinion, and it's trading at $10. So that's really my thinking with Genius. Um, Warby acted a little weak today. This is the last one I was going to touch on, but I think continues to consolidate well after our 200-day break. I mean, again, Warby looks very similar to all of the other stocks I discussed at the start of this workshop. CRISPR, BE, Sphere, looks like a lot of the other successful swing trades we've had coming over the 200-day, consolidating beautifully, tightly with the 9 EMA, and I think acting very well. And I just love the Warby story. There's no short interest here. There's going to be no explosive moves. For those of you that are looking for those types of stocks, it's probably not one for you, but I just think it's a promising small story here with a lot of upside, especially if they execute on the Google Glass as well. Um, I just think it's an interesting story, and I think you'll probably see some multiple expansion on the Google Glasses thing. Tech hardware also always gets a little bit of an edge. So, yeah, I think the Warby story is great too. So that's six stocks in my portfolio. A lot of you ask me a lot of the time, like, "Hey, I didn't buy it when you bought it, or I didn't get in when you got in." So, I want to know when's a good opportunity to buy. All of these names I went over today, I think, are interesting opportunities. And, some of them I bought 10% lower. Some of them I bought even, 2 or 3 days ago or 4 or 5 days ago or whatever. Um, some of them are recent positions, some are 2 weeks old, but they're all, I think, still setting up. And so that's what the purpose of today's workshop was. Like I said, part one of this workshop was recapping some of those big winners, how we stayed in them, how we recognize them. Point of this workshop is, hey, these are some other stocks I own that maybe end up being winners too. Um, like I said earlier, they're not all going to work, guys. Don't expect them all to work. I'm not perfect. No trader is. Not every stock pick I put out is going to double. Okay, not every stock pick I put out is going to go up. Some of them are going to come down, break our points of risk, force us out of the trade. But just be mindful that I'm trying to show you guys what I look for in the charts, in the catalysts, in the thematics, in the short interest, in the volume, in the consolidation, in the flags. These are the things that I look for. These are the things that I've shown you guys in these charts throughout this workshop, throughout the first workshop. Price pushing into the 200, price consolidating in and around and above the 200, 9 and 21 EMAs pointing up, relative strength, high volume breakouts, highest daily volume, monthly volume, weekly volume, candles. These types of attributes is what I look for. And these are the types of things that make up accommodative charts, which is what I like to say. So yeah, that's basically it, guys. And like always, if you go through this workshop and you go through the recording and you say, you know what, I don't get this, or I don't really understand what he's talking about, go to the questions channel and tag me. I'm happy to answer that. Um, I'm happy to give you guys more insight if you need it. I don't want to assume that the way I explain everything is easy to understand. I try to make it easy to understand. I try to not use too much technical language and just show you guys patterns because I really don't think you need anything more than that. I truly believe that you don't. And I think my success in markets is a testament to that because I don't look at anything more than that. Like my charts are just this simple. Just it, just this, just the moving averages, the price, and the volume. I don't look at anything else. I don't look at RSI. I don't look at MACD. I don't look at anything. And there are great traders that do. I don't want people to misunderstand what I'm saying. There are great traders that do, but I don't draw any lines. I don't add any indicators. I don't I don't do any of that stuff. I just look for a good story with an accommodative chart. And the types of attributes that we discuss in these first two workshops are what makes up those accommodative charts. No, Naruto, I don't use a screener. A lot of people have asked me this. I think this is part of the reason why I trade a lot of names that aren't necessarily popular on Twitter. I do trade some that are popular on Twitter. Obviously, Tesla, Amazon, Robinhood, these like core positions I have. Yeah, but you go back to me talking about Centrus Energy, LEU in 2021. No one was talking about it on Twitter back then. Like literally not a soul. Not a small account, not a big account. No one was talking about Centrus Energy at 40 bucks in 2021 at all. But, I was. Or Mirion Technologies, MIR. No one was talking about that. Many of these stocks, BWXT, before it was a hot commodity nuclear stock, I was talking about it many years ago. I'm not tooting my own horn. What I'm saying is that part of the reason I find these stocks sometimes months, sometimes years early is because I don't use the traditional scanners that everyone else is using. I don't use FinViz and these scanners that everyone else is using where they're marking 921 EMAs, they're looking for SEPA, they're scanning through charts. That's not how I find my tickers. I find my tickers by every morning I wake up really early. I read as much research and news as I can read. And I use my research process to find tickers that are relevant to either that research or that news. And I build watch lists manually. It's not an easy process, but I've always done it that way. Maybe it's old school of me to do it that way. I'm not that old. I'm a pretty young guy, but um maybe it's inefficient for me to do it that way, but I feel like I find more alpha that way because I feel like I'm not looking at the same stocks that everyone else is looking at. And do I miss out on opportunities because of that? Yeah, I missed out on like trades like Oscar, this Oscar thing that's been ripping, or there's other popular stocks that everyone talks about on Twitter that I miss out on, and I'm okay with that. I do very well focusing on my own shit. Like even Yonezu, who I talk to every morning, who I love and I think is a great trader, there's stuff he mentions to me, and it's just not for me, you know? And I'm just like, hey man, I love it. I think it'll do great. He's fantastic. Most of the stuff he picks does amazing, but some stuff's just not for me. And so, and does it go up a lot of the time? Absolutely. There's plenty of stuff that smart people I trust tell me about that either I don't understand or is not in my wheelhouse or just doesn't fit my portfolio composition and I pass on it. Many of those stocks go on to double. Many of those stocks go on to triple. Like Mystic, who I love to death, and I've known him for years through Twitter, and he's an analyst in our server. He has his own great Twitter page. He's a killer. I don't trade everything he trades either. And there's amazing stocks you get, like OUST. I actually wanted to get into it. I just had so many positions at that time, didn't get into it. I got into Nebius instead, did very well on that. That stock doubled too. So it's like you're not going to be in everything. And there's going to be some stuff that doesn't work for you, or for some reason you have a hesitation about it. You prefer something else. That's all part of the game. That's part of the stock picking game. I say this too much, but you can't own everything. You need to wire that into your brain. I cannot own everything. I cannot own everything. Tell yourself that. And the truth is, even if you have $100 million, you can't own everything. The amount of money doesn't dictate how many positions you can have. Your positions have to get bigger, right? If you had $100 million, you can't put 10K in each position. It won't do anything for you. So, you know, it would having a bigger account doesn't mean you get to own more shit. It means you own shit in bigger size. That's what it means. So people are like, oh, well, yeah, I can't own everything now because my account's 50K, but when I have $1 million, I can. No, that's not how it works. There's going to be stuff you have to pass on because you're not going to be able to size it enough to feel it, or you're not going to be able to size it enough for it to be a meaningful position, you know? So yeah, that's just kind of a backdrop of that. But yeah, those are stocks. Like I said, we went over. If you guys have more questions, just tag me a request. It'd be great if you could do another workshop on how you hedge a stock position or even market. with an options play when convenient. I'm not going to do a workshop on that. I've answered that question a million times. Hedging is not that complicated, guys. Buy out of the money puts 30 to 90 days out, less than 5% out of the money on the indexes. That's it. That's it. It's not rocket science. Size it at 3 to 5% of your portfolio naked, or if you want to complement the hedge with some kind of long position, then it gets a little bit more complicated. But most of you don't need to do that. Most of you, for the way your portfolio is constructed, you're not an institution, okay? Most of you own a couple of stocks, own a couple of ETFs, and what you mean by hedging is you want to protect yourself from feeling pain to the downside. That's what you really mean by it. And if you want to do that, it's pretty simple to do that. Buy index puts 30 to 90 days out, less than 5% out of the money. That's it. If you're cautious on a shorter term perspective, buy them closer. If you're cautious on a longer term perspective, buy them 90 days out or 120 days out. That's it. That for the purposes of a retail portfolio, not on an institutional level, hedging is a crazy complicated game, and you need quants and an insane amount of math and experience and knowledge to do it. For the purposes of retail people with personal portfolios that are baskets of stocks and ETFs, it is not complicated. And for me to do a workshop on it would make you guys worry about it more than you need to and complicate it more than you need to. Like the stuff I just said and replay it on the recording if you missed it is all you need to know about that. What percentage of each stock is risk? Example, 100K, you've invested 5K in each name. Can you rephrase that? I don't know what you mean by what percentage of each stock is risk. Do you typically put a stop loss? No, I do mental stops. I don't do automatic stops because sometimes I look at the stock or think about the opportunity and I don't want to get stopped out. You only have that liberty if you're actively managing your positions. If you don't sit in front of your portfolio all day or have access to your portfolio all day, you have to set hard stops sometimes, especially if you have a lot of capital at risk or if you're in a volatile name. So I have the liberty to not have to set hard stops, but you may have to depending on your situation. Do you put a stop? No, I read that one. I did. Damn, so I read that one. What percentage of risk management of portfolio? Yeah, Lane, you got to be more specific. I'm just not understanding what you're saying. Are you talking about like what percentage of each position to put into a stock for your portfolio? Okay. Yeah. For me, my standard for like a starter position is 3.5%. For high conviction, it's 7% plus. That can be anywhere from 7 to 10%. For positions that I think have immediate upside, I generally go 5 to 6% at least. And sometimes a position that I think has immediate upside can be weighted like a high conviction position because I plan to take off exposure quickly, right? If I know, hey, I'm buying the stock for a move 2 weeks from now, I'm also implicitly knowing that I'm going to take off exposure quickly. So in those situations, I will sometimes overweight those positions because I know I'm taking some off the top right away. If I'm planning to be patient with it and swing it, then I'm likely to go, okay, I'll start with 3.5%, either by virtue of going up or by virtue of building into the position, I'll get it up to 5, 6, 7% weighting as it consolidates or as it builds out. Why is short interest important to my stock picks? Because it adds explosiveness to the price. And I also like trading stocks around inflection points where there tends to be a lot of short interest. So I like to have short interest. But keep in mind, Rico, it my short interest basket is 3 names if you want to include ASTS, which even though it does still have high short interest, I wouldn't include it in the short interest basket because that's not the purpose of still holding that position. But if you look at the actual short interest baskets, Sphere, Bloom Energy, CRISPR, like that's 3 stocks out of 21 stocks. So it's not like it's the main theme of my portfolio, but I have a basket of short interest stocks. Yeah. Because price can be explosive. but they also fail harder when they do fail. That's something to keep in mind with high short interest setups. If they don't make the move you want them to move, they tend to knife and fail pretty aggressively. So you do risk a little bit more with those high short interest setups. So, but I'm okay with that. Yeah, CRNC looks great right now. Yeah, I mean that's another one, that I would have liked a lot, but too many positions right now. But yeah, beautiful, beautiful move. Would obviously like to see a little bit more volume here, but you zoom in, looks pretty good, right? Zoom out, looks a little bit more muted, but you zoom in, looks pretty good. So yeah, looks great coming out over this 100 day. Today's close was fantastic for this thing. Fantastic. This is an ideal close. Right above the 100 day. Yeah, this looks gorgeous. This will over 10, this can get very, very explosive. A lot of consolidation here. This can make a move up to 15s pretty quickly. Yeah, looks gorgeous. When you decide to keep stock long term, it's LEU, DCU, it makes you want to hold additional catalyst volume. I went over this in the first workshop, so if you're curious about LEU, go listen to the first part of the workshop. But that's it, guys. I got to let Logical start his workshop. I ran even a little bit over. I was supposed to let him start it 10 minutes ago, but this will be recorded. I'll post it when it uploads. Love you guys. If you ever have questions about anything, just ask me. As always, I know I get annoyed sometimes. I will only get annoyed about a question if I explicitly said it in my journal or if you can Google it. If it doesn't meet either of those criteria, then feel free to ask me anything. Um, but yeah, take it easy, guys. I will see you in the morning for the pre-market stream. Peace.